All right, guys. Hey, hope you guys are doing well. This is Vincent. Do me a favor, if you would, please let me know if the volume is working. This thing has a real bad habit of adjusting my microphone settings, and obviously it doesn't do any good to do this if you can't hear it. So if you would please leave me a comment so we can get going. Anybody? Is it working? No? Yes? Not working? I have to do it myself. So we can get going. There we go. All right, so we got volume. Excuse me. All right, so one of the biggest mysteries, so it seems, in real estate investing that I get questions on all the time, it seems to be this ever elusive unicorn for people, is how to raise capital. Not only how to raise capital, but how to do it easily and quickly. And I'm going to show you how to do that. Right now, if you guys have been watching the posts, you have seen that you've got an epic opportunity right now, because Wall Street is in a major panic because of the fake coronavirus and what the impact of the fake coronavirus is going to have on production, on shipping, on distribution, on everything. What happens if Apple can't get the new iPhone 12 released in September or October, whenever they normally release it? Okay, if they can't get it here because all the Chinese factories are shut down, all the cargo coming from China can't get delivered, all the planes are shut down, blah, 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 all this kind of stuff, okay? So what happens in these situations, for those of you who have not been involved in the capital markets before, if you don't understand what Japanese candlesticks are, you don't understand how to read the markets and what's going on. Basically, what happens is this. Right now, everybody's in a big panic and a big tizzy because, the Dow has dropped, whatever it's dropped now, but they wiped out, what is it now? About 4 trillion. They say 5 trillion worldwide in wealth knocked out of the global stock exchanges or whatever it is. And you need to understand something, okay? You need to understand that it's all artificially, number one, artificially manipulated, and number two, there is no money that, it hasn't been wiped out. The 3 or 4 trillion, 5 trillion has not been wiped out, okay? Money, you need to understand what these things are, and of course, they don't teach this stuff in school, okay? What is it called? It's called the New York Stock Exchange, okay? Now, let's talk about that last word. What does that mean? Exchange. So, it's an exchange where people exchange what? Money for stocks, bonds, mutual funds, whatever. Okay? So, when they say that 3, 4, 5 trillion has been wiped out, no, it hasn't. It's just merely been transferred. Okay? Transferred from one person to the next. This is one of the greatest wealth transfers in history. You're seeing it live right now. You're witnessing it. Hang on. Witnessing it live right now. And that's all it is, okay? It's a big transfer. Big transfer, okay? There's winners, there's losers, but it's a big transfer. The money hasn't gone anywhere. The money doesn't just evaporate. It moved from one person to somebody else. And that's all that happened, okay? But what happens when you have these big, epic swings like this, where it drops 2,000 points in a day? Everybody panics, okay, especially the herd, the non-sophisticated investors, they all panic, especially when you have the largest drop, I think they said, in history, if I'm not mistaken. What happens? Well, professional investors, we'll talk about both. We'll talk about professional investors, and we're going to talk about amateur investors. So amateur investors panic and they sell, okay, because they don't listen, and they think that the rocket ride of what the stock market has been doing is going to continue indefinitely forever, and they're told by their brokers and everything is be in it for the long haul, stay in it, blah blah blah. But what happens is when there's losses, all of a sudden they panic and they want to sell. Instead of selling high, they sell the dip. You're supposed to buy the dip, not sell the dip. If you guys don't know what the dip is, here, let me get out of this for a second. We'll get on CNBC real quick. You guys can understand some lingo, okay? All right, so it's this thing. I've been watching this all morning long. It was down, now it's back up. It was down a couple hundred points, now it's back up 303 points. But that's still from yesterday's losses of over 2,000, okay? So let me see if I can get a graph here for you. Okay, so here we go. So here's a stock market graph. This is going to show you guys, this is a 1-year graph right now. And what you're supposed to do if you're intelligent as an investor is you're supposed to buy the dip. Well, here's the dip right here. Okay? Biggest dip. I mean, it's been, this is lower than it's been in, let's see how far this goes back. Lowest it's been since last year sometime, and then before that it was 2017. Okay? So the theory is you buy the dip, and the dip is where it goes off the cliff like this right here. So theoretically what you can do is you can buy low, right? You buy low, and then what? Then what do? You sell high, right? That's supposed to be the objective. Well, the stock market has been at all-time highs for the last 12, 18, 24 months. And that's why 14 months ago when I was watching all of what was going on, if I go back through here, and I'll show you guys this post I did so you can see what I'm talking about. Some of you guys have already seen this. So I can find it real quick. I did it 14 months ago. Yeah, so here's the post. Where's that? Come back. Yeah, here it is. Okay. So here's the actual post that I did right here. Okay. And this is December 18th, 2018. And I told everybody at that point in time, now is the time to get out. Okay. And the biggest reasons for that is when you got Ron Paul and Alan Greenspan, who was a former Federal Reserve chairman, both talking about what does it say? Ron Paul thinks the sell-off could spark depression-like conditions that could be worse than 1929. Right? Both of them come out in the same week and say the exact same thing. And it's a sign because they always forecast this stuff in advance. The problem is the sheeple don't pay attention, right? So a couple of the arguments that I got were, oh, it's fear-mongering, blah, blah, blah. No, it's not fear-mongering. This whole thing is built on a house of cards, okay? It's all artificial manipulation by the Federal Reserve. What does that mean? What that means is the reason that the stock market has been at these all-time highs is because of what they call quantitative easing, which essentially is money manipulation by the Federal Reserve to inject currency into the system to pump things up artificially, okay? Because all of a sudden, all these companies didn't suddenly become worth more. Let me show you. I'll show you just so you guys understand. I'll show you so it makes sense. Okay, all of a sudden, here we go, 5 days, we do this. All these corporations didn't suddenly just, because of some reported virus that has killed, supposedly, which I don't believe, but supposedly killed, less than a couple hundred people? 3,000 people? Something like that? I mean, I'm not, if it's, actually real and people die, that's a bad thing. I'm not saying that, but, what? All of a sudden, the value of American companies goes down because of that? I mean, it's absolutely ridiculous, okay? But it's all a game. You got to understand how the game is played. So, when we talk about raising capital, okay, what the amateur investors are doing right now is they are bailing out, right? They want to sell. They're going to sell low instead of sell high, which is what they should have already done if they'd listened to me 14 months ago. What professional investors do is, again, a transfer. What they're looking for is what they call a flight to quality. Okay, they're moving in what they call a flight to quality. What does that mean? Somebody know? A flight to quality. Okay, we're going to get away from all of these all this volatility, right? We're going to get away from all this, and we're going to move into what's called a safe haven. And we're going to park the money someplace else for a while until we can take advantage of a stabilized stock market. Okay? Now, traditionally, the professional investors, what they would be doing is the flight to quality normally goes to the bond market. Okay? They shift from stocks, which have great upside potential, to bonds, which are supposedly theoretically safe because you already know in advance what your yield is going to be over a period of time, depending on what kind of bonds you're buying with U.S. Treasuries or, there's a billion different types of bonds, municipal bonds, whatever. You have an idea up front as to exactly what your yield's going to be, right? So hey, if I get to go over here and I'm going to get out of the volatility so I don't take any more of a haircut on this investment, then I'm going to move over into the safe haven of bonds. But right now, the problem is, and I did a whole thing on this, a year and a half, 2 years ago, about the problem is the inverted yield curve. Okay, if you guys don't understand what that means, you need to look that up so you can understand what I'm talking about. Yield curve is inverted. All right, so bonds aren't paying anything right now. Okay, we have what are called, and most of you guys will not understand this if you've never dealt with the stock market, the bond market, Wall Street, mortgage-backed securities, any of those things. What we have right now are negative interest rates, okay? So there is no value in the bonds at this point. So they are not the safe haven that investors are going to be looking for, okay? Because it's like, you might as well go get your 0.1% down at the Bank of America, CD or something, because they're basically worthless. All right, they're not doing anything. So, as real estate investors, this gives you guys a truly phenomenal opportunity to take advantage of all of this money that now is looking for a safe place to run to. Okay. And that's what you need to understand, okay? Most people don't understand how you do that, but I'm going to show you right now. So, here's the backstory. For those of you who don't know me, my name is Vincent Polisi. I personally raised on my very first attempt at raising capital, this goes back 15 years ago, over $1 million, okay, in liquid. I want you to understand all of these words so you can understand what I'm trying to teach you here, okay? Liquid, what does that mean? It was liquid money, okay? Not a checkbook, money wired directly to my account. Liquid funds, over $1 million in liquid funds, okay? Non-recourse, what does that mean? That means that I am not a personal guarantor for the funds, okay? There is no recourse against me in the event the whole thing goes belly up, because I didn't personally guarantee it, okay? So understand that. We're talking about over $1 million, liquid, non-recourse, wired directly to my bank account. You guys like to know how to do that? Let's see. This didn't even have anything to do with, and I should put in here, let me adjust the slide. Let me do this. Let me make it even better for you. Liquid, non-recourse, non-collateralized. Okay? You guys know what that means? So, like when you do a real estate deal, like, the bank lends you money, the house is the collateral, or the apartment building is the collateral, or the commercial building is the collateral, right? This was non-collateralized, non-recourse, and liquid, okay? I could spend it any way I wanted to. No recourse against me at that point because I don't have a personal guarantee. And it's not collateralized by any other asset, okay? So there was nothing for me to lose. Does that make sense? Does that make sense to anybody? You guys leave a comment. If you're on Facebook Live, leave a comment. Well, it's the only place I'm doing this. So Leave a comment. Does that make sense? Okay, you guys understand what I'm talking about? Because what you're going to be able to do is something that's even easier than what I did. So here's what we're going to cover. The number one mistake people make and how to avoid it. Okay, and this is a big one. Huge. I watch this every single time I watch somebody try to raise capital. Okay, and almost everybody makes this mistake. Next thing up, the number one question that you must ask and answer. Okay? You must ask and answer this question if you're going to raise capital. We're going to walk you through a step-by-step on how to get a deal funded. Okay? How to get a deal funded. What type of deals are we going to be talking about? Well, it's going to depend on what type of deal you're trying to do. Could be for anything. Could be you want funding for a rehab. You want, without having to go through a hard money lender and all that kind of crap. There's all kinds of stuff. You got all kinds of money that's sitting on the sidelines right now that'll be in self-directed IRAs and everything else that you guys can get access to very easily if you follow the instructions that I'm about to show you, okay? All right, so next up, I'm going to show you how to find the frogs, okay? And then how to kiss those frogs and find the best kisser, because that's what you're trying to do. Sometimes you got to kiss a lot of frogs. Sometimes you don't have to kiss a lot of frogs. Sometimes you kiss one frog. All right? And when I went out and did this, the very first frog I kissed, I got over 600 grand from. Okay? Second one was over 400 grand. All right? And let me explain this to you. These were one meeting deals, okay? And all of a sudden, here comes a wire, and one guy wrote me a check for 400 grand. All right? And then the most important piece of the puzzle, okay? This is what you're going to learn today. Now, when you see me, here we go. All right. So, number one mistake that people make, and I see this time and time and time again, they don't understand what a deal is, okay? And what do I mean by that? What I mean by that is that they want capital for what they want because they want it, not because it represents a good deal. Most of the time what you'll see is people wanting capital for operating expenses, okay? That does not represent a good deal for an investor. The other thing is they do zero due diligence. Big, huge mistake. You see this all the time in real estate normally, but especially when raising capital, they do zero due diligence on anything, which I'll show you how to take care of here in just a second, okay? There's zero prep work, okay? What does that mean? They don't do any work, man. They do nothing to present a good deal, to vet a good deal, to do the due diligence on a good deal. It's all about, hey, I just want funds, right? That's it. Basically, that's what I've seen it time and time and time and time again. I want to raise money for what? For what? There's like one guy, he wanted to raise money because he wanted to start a real estate brokerage. Well, you don't need money to start a real estate brokerage, okay? If you got your broker's license, hang your broker's license, get to work and make money, and you can self-fund, right? But no, he had some grand master plan of, using the money for operating expenses, to make the monumental mistake of hiring a bunch of people and getting offices and all this other crazy nonsense. And that does not represent a good deal, okay? And as a result, the guy never got funded. So I'm going to walk you through this so it'll make sense, okay? Now, the bottom line here on this one is, in other words, they don't have an actual deal and can't figure out why no one will fund it. And the biggest reason is because they don't have a deal. They don't know what a deal looks like, okay? And they don't know how to present it. Now, the most important question that you can ask and answer is this. Why is this a great deal for the VC? VC stands for venture capitalist or angel investor or whatever. Why is it a great deal for the VC? That is your starting point, okay? This is where you start. Does that make sense? Somebody let me know. Does that make sense? It's not about you, okay? Not about you. It's about how is this a good deal for the VC? That's where you start. You don't start on what you want. Most people do this backwards. They say, I want, but what they don't ever answer is, why is this a great deal for the venture capitalist? Okay? You start with the end in mind. And the end in mind is, why is it a great deal for the venture capitalist? And if you can't answer the question, guess what? It's not a good deal. Okay? And you're not going to get funded unless you find some dummy. So here, let's go through a step-by-step walkthrough real quick. This is the 3-course meal. Excuse me. Sorry about that. This is the 3-course meal you must prepare and eat before you get dessert. What is dessert? Dessert is the money. All right, so pay attention. You want to raise capital like a professional. You want to do it easy, and it's not hard. All you have to do is follow these instructions. Number 1, a pitch deck. We're going to cover what that is. Number 2, a prospectus, and we're going to cover what that is. And number 3, an actual business plan, which nobody ever wants to do, and they can't figure out why they can't get funded, which is mind-boggling to me. All right, so understand something. When I raised over the more than $1 million, the pitch deck thing wasn't really a thing back then. This was going back like 15 years ago. I didn't really hear about the pitch decks until sometime in probably the last 5-6 years, I guess, 7 years, maybe 8 years, maybe. So I never did a pitch deck. Okay, I went straight in for a prospectus and a full-blown business plan. So I skipped step 1. I don't know why I'm skipping step 1, but because I'll show you why here in a second. But I never actually did the pitch deck. I went in for the prospectus and the business plan, and that's how I raised over $1 million in liquid capital. Okay, what is a pitch deck? A pitch deck is an appetizer. Okay, it basically is there to be, as I say here, it's a delicious little niblet to whet the appetite for the meal. All right, it's the teaser. Okay, it's to generate interest. It briefly lays out the concept of the deal and tantalizes the VC, again, that stands for venture capitalist, with a great return, because that's what he's looking for, right? His only purpose is, what's in it for me? What kind of money am I going to make? So that's what it ends up doing, right? That's the sole purpose, is to get a request for a prospectus. Okay, this is not some overblown, 400-page thing. We're talking about minimalism here. Very, very, very minimalistic. Okay, just enough to get them excited. Now, I'm going to give you guys this link so you can see examples of actual pitch decks that got funded. Okay, and these are companies that you actually know. I'm going to go to the link right now, but I'll post it on Facebook as well, so you can see. So here, everybody knows what Airbnb is, right? You guys want to see how Airbnb got funded? Here's their pitch. Here's the actual pitch deck that they had. Okay. And you can download the slides right here. I'll give you guys the link. Everybody knows who Uber is, right? Here's Uber's actual pitch deck. Okay, was it nine little slides? Okay, remember, simplification. Just enough. The appetizer, just to get their. Oh my God! Look at this. Facebook's pitch deck. Look at this. You guys see this? The platform you're on right now. How'd they get funded? Here it is, right here. You can go through and you actually see what they did for their pitch deck. Okay, Slidebean. You probably don't know who Slidebean is, anyway. Nonetheless, and then they got a whole note and video on here on how to do all this stuff. But these are very simple, 9 slides. Okay, or nine slides that you then turn into a printed material or something that you can email out or use as a keynote, etc. Okay, from companies that you actually know. I'm going to give you guys the link. Get on here. Let me find it real quick, and I'll give you guys the link right now, so that you can go and actually get a pitch deck template, okay, yourself. All right, there you go. Multi-billion-dollar companies. There's the pitch deck. Okay, got it? Makes sense? Hopefully that makes sense. Now, next up, go here. Let's walk through Airbnb's pitch deck real quick so you can understand what they did. All right. Now, they didn't call it Airbnb back then, okay? And the thing you need to understand is, in most of the time, when you are starting a business, you are going to be in a scenario where hang on a second, guys. Bear with me 1 second here. What time was that? I got a delivery that's going to be showing up at the front door in a minute, so I'm going to have to pop off here in just a second, but I'll be right back. But until the doorbell rings, just give me a second. I didn't realize I had this thing showing up right now. Otherwise, I would not have done that. Hang on for me 1 second. Hang on. Tell my kids to let me know when the doorbell rings. Okay, so what you're going to find, for those of you who have ever started a business, you know what I'm about to tell you, okay? If you've never started a business, you're not going to probably understand what I'm about to tell you. When you start a business, you have a concept in mind. And that concept generally is not the ultimate form that the business takes, okay, for a lot of different reasons. So they didn't call it Airbnb. They called it Air Bed and Breakfast initially, okay? And they have a little slogan down here, book rooms with locals rather than hotels. Very simple to understand. Okay, hang on for me 1 second. Guys, I apologize. I'll be right back. All right, sorry about that. All right, so very simple to understand, right? Book rooms with locals rather than hotels. Everybody understands that. And then they go through, okay, problem. What are they doing here? Does everybody know? Take a look at what they're doing. So they're going through this right now, and they're going to go ahead and identify what the problem is. Okay? Price is important concern for customers booking travel online. Hotels leave you disconnected from the city and its culture. There's no easy way exists to book a room with a local or become a host. That's not actually true, because at the same time that they were doing this, there's a company that I've been using. For those of you guys who don't know, it's kind of funny that this is a pitch deck that we're looking at. Since 2008, I've lived in nothing but high-end luxury vacation rentals all over the United States. And the predominant player in the U.S. market for that platform of renting vacation rentals is and always has been VRBO.com. Okay, it stands for Vacation Rentals by Owner.com. Airbnb, they get a lot of press because they raise a bunch of money and all this kind of stuff, but you talk to a lot of people, and it's not as big over here as VRBO. VRBO finally got bought out by HomeAway. You see their ads and stuff on TV right now, but nonetheless, there was already a platform out there for this. VRBO has been around for, I don't know how long, at least 12 years, 13 years that I know of, that we've been renting properties through that platform, okay? But nonetheless, here, Airbnb's coming out, and they're saying, okay, I guess they didn't know about VRBO, or they figured nobody else knew about VRBO.com. And so they're trying to create their own, competing platform, whether they knew they were competing or not. All right, so what was the solution? So here, we start with the problem, okay? Problem, price, hotels, no easy way to book a room. Solution, a web platform where users can rent out their space to host travelers to save money, make money, share culture, okay? Boom. Market validation, okay? They're giving numbers here to validate why this is a good idea. Market size, okay? See what they're doing? 2 billion trips booked worldwide, 560 million budget in online serviceable available market, and then 84 million trips with Airbnb share of market, okay? Then they go to the product, and they're giving them an example of what the early, take a look at this. If you go to Airbnb.com right now, it does not look like this. So when we talk about, how things change, like from your original concept. So here's Airbnb right now. Here was their pitch deck. This is what it looked like, okay? They don't look the same at all. Make sense? Okay, and what they're doing is they make this very simple. Where do you want to go? When do you want to check in? When do you want to check out? How many guests are there? Boom, search. Okay, but it's almost as simple as Google, and that's exactly the way that it should be. But this was their original pitch deck that got them funded. All right, so now we're talking about the money. We take a 10% commission on each transaction. All right, so $84 million in trips to Airbnb, $25 average fee equals $2.1 billion in revenue projected by 2011. Okay, so this is what the VC, the venture capitalist, angel investor is looking for. Right. Next up, adoption strategy. How are they going to market this? Okay, how are they going to get it out there to the public? Okay, and they're going through all their events, their partnerships, and then, oh my goodness, look at this. Who's this? Craigslist, dual posting feature. Imagine that. See that? Isn't that crazy? So property is posted on Airbnb that nobody knows about, and they had it built in so that it would also get automatically posted to Craigslist, which everybody knew about at that point in time. Now let's go to their competition. They're giving them basically what's called, it's kind of like a SWOT analysis. For those of you guys who have never done a prospectus or a business plan, a SWOT analysis means strengths, weaknesses, opportunities, threats. Okay, SWOT. So this is who they're saying they're. Oh, they actually do mention VRBO. Here it is, right here, down the bottom left. Okay, VRBO.com at the time there was nobody bigger. I don't care what they say on this thing. There was nobody bigger in the vacation rental space at that point in time. This was their biggest competitor at that point. Okay, so they're showing, affordable, expensive, online transaction, offline transaction, whatever all this means. Okay, they're trying to show with transparency to the VC investor what the competition actually looks like. All right. Now, here come their competitive advantages. In other words, how are we going to beat these people right here? Right? First to market for transaction-based temporary housing site. That was not true. They were not the first to market. Host incentive, they can make money over couchsurfing.com. Okay, so they're saying, okay, they're going to make more money with us than they are because we're coming in at a cheaper price than some other website. List once, hosts post one time with us versus daily on Craigslist. Okay, so that's a benefit for the consumer, the host, because it's that's not actually accurate anyway, because on Craigslist it's you top post every 48 hours, but nonetheless it's a real pain in the rear end. Now it's obviously changed since then, because now you can just pay $3 or $5 for an ad on Craigslist and it'll stick for 30 days. But back then it was a little different. Okay, ease of use, search by price, location, check-in, check-out dates. Okay. That's not a competitive advantage because VRBO had that as well. I mean, that's a normal thing that you would expect. Profiles, browse host profiles and book in 3 clicks. Okay, booking 3 clicks sounds great. And then design and brand. Memorable name will launch at historic DNC to gain share of mind. Okay, and then they go through the management team. Okay, who the people are, what their background is, blah blah blah. Okay. Press, they had already gotten through press releases. All right, and they go through. Okay, so the biggest one on here is probably Mashable. You guys probably know who Mashable is. Cool alternative to a boring evening in a hotel room. Okay, and they give their little testimonial things. Here's the user testimonials from actual people. Wonderful. And then the financials. We're looking for 12 months financing to reach 80,000 transactions on Airbnb. Okay, angel round $500K. This is the initial investment opportunity. Now, I want you guys to understand something. I raised over $1 million myself, all right, without a pitch deck. They're looking for 500,000 so they can get to 80K. And I'm not saying I'm better than them. What I'm saying is that totally different models and different things. But nonetheless, they were only looking for 500 grand at that time. And then the objective was to get to 80,000 bookings, average fee of $25 to $2 million revenue over 12 months. Here, let me do this real quick. I want to see what their numbers are. This is what an investor is going to do. So 80,000 times $25. Yep. Okay. So $2 million in revenue. $2 million in revenue. Now keep in mind, that's gross revenue, not net revenue. But that's their pitch deck. 14 slides. Okay. That was it. This is what they used to get funded. All right. Now this was not, I'm going to tell you right now, not the only information they provided to investors to generate capital. But that's the original pitch deck, nonetheless. Okay. Next up, the prospectus. Okay. So what is a prospectus? Technically, and I'm going to explain this so it'll make sense why I'm saying technically. The definition from Investopedia says, a prospectus is a formal legal document that is required by and filed with the SEC that provides details about an investment offering for sale to the public. Okay. Now, when you guys are out there doing your deals, you need to be aware of what the laws are that govern what you're doing as you're attempting to raise capital and how you're doing it, because there are certain things that you can and cannot do and certain things you can and cannot say when you are raising money. Okay, and it depends on whether or not your offering falls under what's called the Jobs Act, or if it's under SEC, or maybe it's not regulated by either one of them, depending on how the offering is. It's important to understand that before you start going out there in the marketplace with an actual prospectus. Okay, so understand that up front, that you need to do your due diligence and you need to understand exactly what it is that you're putting together. Okay, now, prospectus, what you want in the prospectus itself, okay? Basically, it's the whole enchilada. And this is the biggest thing that you need to understand, is that every possible question should be answered in the prospectus, because what venture capital investors hate is to have to ask questions, okay? You guys understand? They don't, if you provide them a prospectus that doesn't give them all the information, they get aggravated, okay? And you go to the bottom of the pile. And you may not even then get considered anymore because they know that you don't know what the hell you're doing. So when you put your prospectus together on whatever investment type deal you're doing, you want to make sure that every possible question is answered. How do you do that? Well, number one, you should be going through and saying, okay, I got to make sure that I've answered everything. And then you have somebody else review it that's in the industry. Then you have somebody else review it that's not in the industry. Okay, so that way you can get third-party inquiries and understandings as to what you're missing. What are you not thinking about because you're too close to the forest to see the trees, right? You got to make sure that every question is answered. Anything and everything that they could possibly want to know to be able to make an intelligent investment decision got to be answered in the prospectus, okay? You want total transparency with no BS. You do not embellish, okay? Pay attention. You do not embellish. This is not a sales spiel, pie in the sky, golden unicorns, all that nonsense, okay? I'm not saying don't be, positive and optimistic and all that. I'm just saying don't over embellish because they're going to see right through it, okay? Your numbers need to be tight. They need to be realistic. You need to have, here it goes, where we talk about a SWOT analysis, right? Strengths, weaknesses, opportunities, threats, and then the ROI, which stands for return on investment, and formula that will pass a forensic audit by a forensic accountant. In other words, do not bullshit on your numbers, okay? You understand? Because you're going to get caught. They're going to find out that you're full of baloney, and you're not going to get your deal done. So the numbers need to be tight. So we talk about the SWOT analysis real quick. Let me show you the SWOT analysis here. Okay, so they go through. We talk about strengths. Okay, market size, weaknesses is right here, right? Opportunities. Okay, competitive advantages, and then threats goes back to, once again, basically their competition. Okay, it's overloaded at Craigslist and all this other stuff is on here. That's not a SWOT analysis, but that's essentially what they tried to incorporate when they ended up doing that, because you got to do that, okay? You got to let them know what they're getting into, all right? You got to let them know that you've thought through. And let me tell you this, just so you understand. The W and the T, all right, in the SWOT analysis, which is weaknesses and threats, you better have them identified, okay? And you better not be afraid to identify them. You better be transparent with identifying them so they understand, and they've got total transparency with what exactly they're getting involved in, and that you have already, done the due diligence to understand where the potential problems are going to be. Now, in real estate deals, it's you don't really, they're fair, for what most of you guys are going to try to do, fairly simple. Okay, your strength is okay. You've got experience, blah 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 blah. You're in a strong market. Real estate, there's a shortage of housing. I mean, we can go through a whole SWOT analysis for real estate. Weaknesses would be, depending on your market, could be ability for buyers to get financing, could be limited subcontractors to handle your rehabs, could be whatever it is. Like, I don't know. Opportunities, obviously, you've got opportunities to then scale up from whatever you're doing and really crank things into high gear for your production. And then the threats would be whatever the competition is and or legislation that's pending or whatever. Okay, depends on the exact deal type. And you got to put that stuff in there. Okay, they if you don't, I'm just telling you right now, they're going to know that you're a rookie. All right, so you got to put that stuff in there. Now, here's the key thing. If the VC has to ask questions after reviewing the prospectus, you have failed. So you want to make sure that they don't have to ask questions, okay? Your numbers are there. The SWOT analysis is there, right? The premise is there. Why it's going to work is there, right? Everything has been thought through backwards and forwards, okay? Now, next up we get to the business plan, because basically, depending on, how you end up doing this, I'm going to advise to you, and I know you don't want to do it already. I'm going to tell you that, okay? A business plan, because they're a pain in the ass, and they require a tremendous amount of work and thought process, and they're always wrong, by the way. But you need to go through this process of putting together the actual business plan when you're trying to raise capital. Because let me explain this to you. If you get in front of an actual professional venture capitalist or angel investor, and you don't have a business plan and your business plan isn't tight, they're going to know, again, you don't know what you're doing. Okay? Now, the key thing with the business plan, the reason it's beneficial is, and what I did, back in 2005 was I went out and bought business planning software, because I obviously was not an expert at putting together business plans at that point. And what it did was made me think about all kinds of stuff that I had not even considered. Okay, and I'll give you examples of what I'm talking about. Like, you are thinking about and estimating monthly rents, but have you actually done the due diligence to determine whether or not that's accurate? What about the electric bill, right? What about the other things that you haven't thought of yet, like what it takes to rent a copy machine, like depending on what type. This is for mortgage banking, but how much is what does it cost monthly for a copy machine? How much for the toner? How much for the paper? How much for the internet, right? How much are all of these actual expenses? It makes you go through that process and think through all those things, so you don't forget anything. Now, people ask this question all the time: what's a business plan, and how does it differ from the prospectus? Okay, well, the business plan contains all of the information from the prospectus, but also contains the actual mechanics and specific details of the business presented by the prospectus. So basically, the prospectus is a nice overview. So you'll have the pitch deck, which is like a little appetizer. The prospectus goes into greater detail, but then the business plan is going to have all that information from both the pitch deck and the prospectus, and it's going to show the actual mechanics and numbers, the actual financials on exactly what it is that you're doing down to the penny, okay? Now, one thing you need to understand when you're putting together a business plan, I don't care if you're the best accountant on planet Earth, it doesn't make a difference. You always want to plan for 33% greater expenses than your actual estimates, even if you've confirmed your estimates, because it always, always, always works that way, okay? The expenses are always exceed what you initially think that they're going to. This is why you always want to make sure that you're asking for enough money, because the worst thing in the world that you can do is go through all this process and, oh, yeah, we raised capital, and then it's not enough, and we can't follow through. Does that make sense? Can't follow through to what we need to do to make money. okay, because you're out of money now. And worst thing in the world is have to go back hat in hand to the investor and say, hey, we can't, we told you this, blah, 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 and we can't finish doing it so that we can start generating revenue because we're short 150 grand. Okay? Does that make sense? So you always want to make sure that you're estimating. And for those of you guys that are rehabbers, I assume you guys are doing this anyway. Is anybody that's on here right now a rehabber? You guys, anybody do rehabs? If so, when you do your estimates, do you tell me what? Leave a comment real quick. How much over and above do you pad your estimates when you're taking a look at a rehab? What do you do? What's your number? Personally, for me, I always take a look at, okay, this is what I project the expenses are going to be, and I add a third on top of that, so I have a nice little buffer and a pad in the event that things go over. Okay, so Frandy says 10% over and above. All right. How many times have you been wrong on that, Frandy, on 10%? It's actually been more than 10%. Ever? How often do you have to tap into the 10%? That'd be good information to know. Real world information from somebody other than me. All right. Now, I covered this already, but what the pros knows, the business, once funded, will never mirror what was presented in the business plan. Okay? It's a bizarre process, because when you start the business plan, you have a concept. And what most people think is that the business is going to, perfectly match and mirror exactly what was demonstrated in the business plan. And I can just tell you from personal experience, it never works that way. All right. That doesn't mean that you made mistakes. It doesn't mean it's a living organism at that point. And, the markets are changing. Decisions are being made. Decisions change. You find out new information, you make a better decision, and eventually the business morphs into something that it wasn't intentionally, or let me rephrase that, it wasn't originally planned to be. And this happens all the time. So the business plan is not the Bible as it relates to the, the way the business has to actually, what it actually has to become. It's basically the guidelines, and really the purpose is, the greatest purpose, in my personal opinion and experience, is that, like I said, it takes you through a process, and it makes you think through things that you have not thought of, okay? And to me, that's its greatest asset, and that's one of the reasons why, when I do this stuff, that's why I actually take the time to do it, because, as intelligent as I am, and, got a great ego and all this stuff, I can't think of everything, okay? And, that's why I have my stuff reviewed, even though I think it's perfect. I want a second set of eyeballs. I want a third set of eyeballs on this. What did I miss, okay? What did I not get answered? What questions are you left with now that you've read this, okay? So that way I can go back and I can tweak everything, because I don't want, if I go out and raise capital from somebody, I don't want them to have to ask me questions. Not that I'm not going to answer their questions, don't misunderstand. I want to have provided them something so thorough, that's so friggin' tight, that they would be an absolute fool to not fund it. Does that make sense? And that's the way you want to be. That's what professionals do. Now, what you see on Facebook all the time, that is not what you see on Facebook, okay? You see all this stupid nonsense of people vomiting up idiocy on even if we're talking about just on like forget getting funding. Let's talk about on a deal. What do you see on Facebook every single day? Oh, blah blah blah. Cost is 45 grand. Needs $20,000 in repairs. ARV is 110. PM me for details. That's not how you do it. Okay, I mean, you can, and have people made money doing it that way? Sure. But in the real professional world, if you really want to build and grow and scale, you do your homework, okay? And you put the prospectus together the right way so that they don't have to ask any questions about anything else, okay? If you're just on, I'll just say, let's just take a normal deal. Okay, like you have a property that you're trying to do a contract assignment on, or you got a property you're trying to flip, whatever. I shouldn't have to pull teeth. And I'm just going to tell you this. Myself, anybody else is considering your deal, I should not have to pull teeth to get the information necessary to be able to make an intelligent, competent, informed decision. But that is not what you see. And the reason that's not what you see is because that's not what being taught by, those other stupid guru show courses that are out there, right? They don't tell you how to present things the right way so that an investor, a buyer, whatever, has all the information that they need to make an intelligent decision. Instead, they got to pull teeth. Oh, I got to send you, now I got to email you. Or you're going to email me, or I got to DM you. Why do I have to go through all that crap? It's a real estate deal, right? If I jump on Facebook right now, I guarantee I can jump in group after group after group, and you guys know what I'm talking about, right? And it's like nonstop. It's like amateur hour. It's like if you want to make money and you want to do it at scale and you want to do it easier and faster, take the time to do the homework up front, and then when you pitch, if you're going to do the stupid little Facebook post pitch of a deal that you're trying to assign or sell, make sure it has all the information. Why do I have to DM you to get information? Why? I mean, why can't you just put it out there? Does that make sense? Hopefully that makes sense, right? If you go to Realtor.com, right? It's got all the information. I don't have to. It's all right there. I don't have to pull teeth to try to figure out whether or not this is a house I want to buy. I know exactly what all the parameters are. Here, we'll take a look at it. And I'm not an advocate of, realtors and all that, but if we go to Realtor.com and you pull up, maybe is their site down? Okay. Pull up a house. I don't know what this is, but anyway, right? Then it's going to give you all the information, right? You got bedrooms, bathrooms, square feet, lot size, right? When was the property built? Last sold for, okay? Home value, where it's been. You got all the information that you need. Similar homes for sale, so I can start trying to pull comps, right? If that makes any sense, those aren't comps because they're not sold, but nonetheless, you see what I'm saying, right? They've got a ton of information that's on here that I don't have to pull teeth to figure out whether this is or not. This is something that I want to pursue, okay? And when you guys are out there and you're trying to raise capital, you got to do the exact same thing, all right? Now, all right. So if the business plan is not actually going to mirror what the business actually will look like, why do it? We've covered this a little bit. It requires you to think through and analyze every aspect of the business prior to the first dime being spent. I cannot tell you how imperative and important that is. It's unbelievably important. All right. It helps you uncover flaws in your initial concept. And there will be flaws, okay? And you'll be happy that you took it through that process so that you could fix those flaws before you presented it to somebody else and looked like an idiot, okay? It helps you realize expenses you never considered that will dramatically impact the bottom line, right? That's a major, major benefit of a business plan when you're trying to raise capital, all right? And finally, if a VC asks for one, you are prepared and look like a pro. Okay, there's nothing worse than giving somebody a prospectus, they're interested, and they are now ready to proceed and move forward to be able to make a decision to fund whatever your deal is, and they ask you for a business plan, and you don't have one, and you look like a dumbass. Okay, so that's why, these are the reasons why you do it. Okay, because it's only going to help you. Okay, now, next up. You got to kiss those frogs and find the best kisser. And what does that mean? That means you're going to shop your deal, okay? You got to shop the deal, and you're going to find out who is going to provide you the very best terms, and are they the best fit for whatever you're trying to do. Because when you're trying to raise capital, there's a lot of different ways that you can do it. You can do it from the standpoint of raising capital via nothing but a loan, where you're not giving up any equity in a property or a business or something like that, which obviously is preferred. You could set it up in such a way that it's a loan plus a certain degree of equity. And if you guys understand what I'm talking about, a percentage of the business, or you can set it up where it's strictly a percentage of the business. Okay, or you can set it up where it's a percentage of the business and a certain amount of distributions and blah. I mean, there's all different kinds of ways to set things up. So you're obviously looking for the most advantageous for what you're doing. So you want to think through what your offering is going to be. Okay, and I'll tell you, like when I did the very first one, the way the deal went down is essentially, I'll show you in a minute. Actually, I have a slide for it. I'll show you exactly what happened. All right, so different deal structures. There's deals for fees, for equity, interest from a loan, controlling interest in the business, revenue participation, or any combination of the above. So depending on what type of deal you are trying to raise capital for, the VC is going to be looking for one or more of these. So understand that when you're going into it. Now, your job obviously is to, make it as few of these as possible and as the least expensive as possible. And hopefully you're doing that because you put together a solid deal and you actually know what a deal is. All right. Now, here is the most important piece of the puzzle. You ready? The exit strategy for both of you, and this is where a lot of people screw up. You have to go in with the exit in mind. Okay? So what is going to be the exit strategy for both of you? Because for me, all right, when I do deals, and if I have to raise capital, and don't take this the wrong way, but I want to get rid of the investor as quickly as possible. Right? I either want him, if it's a straight loan, I want him paid off as fast as possible. If it's a scenario, where if we go back a couple of slides here, and we go back to here, different deal structures. If they're in it for some type of equity or revenue participation, I want to be able to buy them out and get rid of them as quickly as humanly possible, so I get back to 100% controlling interest and 100% profit. Okay, so I begin with the end in mind, and I'm looking for what's the exit strategy going to be for both of us. And what that means is, how do I get rid of them, number one, and then you guys need to understand there's the purpose of a business, and most people are going to disagree with this, but it's only because you haven't presumably been through this process. The purpose of a business is to build, grow, scale, and then sell. Okay? That's the purpose. Now, what am I talking about? Well, let's do this. Let's play a game. I'll show you. I'm going to prove to you that I'm right. Ready? You ready? Here we go. So, Airbnb, right? What'd they do? Here, probably a better example. Uber. Build, grow, scale, and then what'd they do? They sold. We say, no, they didn't. Well, yes, they did. They did an IPO, right? You can buy Uber stock, right? Right? Is that right? Okay. So that's exactly what they ended up doing, right? What Facebook, right? Same thing. I mean, the sole purpose is build, grow, scale, and then sell. That's the purpose of a business. That's what you're trying to accomplish. Okay. So when you're looking at the exit strategy for the investor is going to depend on what type of deal you're doing and whether or not they're in it for equity, interest, or just strictly loan, fees, revenue participation, distributions, whatever it is, whatever the strategy is or the model is that you're using for them. But you need to think through the exit strategy for both of you. So in any business that I have set up, and I'll just give you an example. So we have, we do the medical commodities wholesaling deal, and for those of you who don't know that, it's, unbelievable cash cow money maker. And so when we take a look at the exit strategy for that particular business model, okay, the business model that we're working on is a nationwide footprint, okay, to become the largest reseller in the United States. And then after we have, turned it into a cash cow, it's already a cash cow, but after we've turned it into a nationwide cash cow, and we have the nationwide footprint, and we're the largest reseller, the objective is to sell for 9 figures, okay? That's part of the business plan. The exit strategy is not to maintain the business in perpetuity, even though it cranks cash like a banshee. The ultimate objective is to sell for 9 figures. And for those of you who don't understand 9 figures, that means 100 million plus, okay, based on the numbers. And that's why when I set up the, let me show, I'll just show you guys this because most of you guys don't know, you don't understand like real business. And you buy too many of these stupid courses that are out there. So let me show you how things actually, when you're actually running an actual business, okay? All right, and you understand what it is that I'm telling you right here. So if we go into here and I go into our deals, and I'm going to show you as I go through all this, okay? You're going to see field after field after field after field after field after field, okay? For an individual deal, right? This is for how many boxes are there? How much are we paying, right? What are any additional expenses? Who do we sell it to? I've got all the stuff completely automated in here. Does it go to eBay or does it go into the wholesaler that we sell to all the time? Who the courier was, right? Who to send the money to, who to send all the stuff to. And then as an example, the PayPal transaction ID number, every single deal we do, it's put in here. And I'm going to show you guys this because I want you to understand the way you need to be thinking, which is not what you're being taught in these courses, okay? So when I set this stuff up, and I programmed all this myself, right? So we have that information in there, okay? The right signature receipt, which generates automatically. So we have confirmation, we have third-party confirmation with an IP address, and then we have all the images of the actual product. We have the tracking number for the shipping for each individual deal. All this stuff goes in here. Image of the shipping receipt, okay? Image of the ATM receipt where the courier got the cash out from the ATM. And then we go into our reconciliation down here at the bottom, sold for, including shipping, how much did we sell it for. We go through blah, 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 blah. If there's any reason we have to do a refund, the transaction number for the refund, because the product got damaged in shipping or something like that. There's all kinds of stuff that happens. Any ancillary expenses on the deal, whatever it is. And it's a complete end-to-end, every detail about the transaction, individual transaction is in here. Now, why do I have all this stuff in here, right? It's a bunch of minutia. None of it is required. None of this is required at all to do a deal. Well, the reason why I have it all in here, I have all the numbers, I have all the PayPal transaction IDs, I have all the tracking numbers, I have all the revenue, I have all the expenses, I have the exact mileage, we have who did everything, is because I began with the end in mind. And if we go back to the slide, okay, I'm going to create a new slide here. The end in mind is, okay, I want to sell for 9 figures, okay? That's the objective. That's my exit strategy in the next 3 to 5 years. That's where I want it to be. I want to sell for 9 figures. Well, what do I have to do that? I have to be able, now think about this, because you're talking about over 100 million bucks. What do I have to do to be able to do that? I have to be able to survive what is called a forensic audit. You guys know what a forensic audit is? Anybody? Leave me a comment if you know what an actual forensic audit is, please. All right? You guys know what it is and what the purpose of it is? Forensic audit? Anybody on Facebook? Come on, guys. Somebody knows what this is. Right? No? Yes? Maybe? I got to be able to survive the forensic audit. And so, the forensic audit, for those of you who don't know what that means, is that before somebody's going to stroke me a wire for 100 million plus, okay, they're going to have one of the top 5 accounting firms go through all of our books, okay, to make sure that we're not cooking the books. And they're going to audit, and it's called a forensic audit because they're looking for problems. They're looking for where are we committing fraud, right? Where are the issues, right? And so what I did, because again, when you start a business, you want to begin with the end in mind, and the end is your exit strategy for that particular business is I began to say, okay, I got to be able to survive a forensic audit, so I want total transparency on everything. So they have an ability to go through and anything on here, and if they want to find out if did that product actually ship, okay, or is this a bogus deal that we put in here? Well, they've got the tracking number. They can see end to end on USPS. We've actually got a thing in here where it links automatically. They can click on that and they can say, okay, well, the product, it said it was purchased in Phoenix, Arizona, and the tracking for that was paid for, and the product shipped from Phoenix to the wholesaler that's mentioned up here above, and they can connect all the dots and see that each individual deal is legit and there's no funny business, okay? But this is what you do when you're running an actual real business, okay? It's not all this, and again, you don't have to do any of this stuff to make money in doing test strips or whatever. I have it set up this way because I have an end in mind, okay? And that end, like I said, is to sell for 9 figures, and I know to be able to do that, I got to be able to survive the forensic audit. So that's why I've got it set up that way, because I'm thinking about the end. I want the 9-figure payday. All right? Now, here's how it works in the real world. You guys watch all these movies, Wall Street and Boiler Room and all this other stuff. Basically, when you're out there and you raise capital, it's not normally going to be, and I've done the big things in the multi-billion-dollar corporation boardrooms with a group full of people, and done a full-on presentation and all that stuff in my younger years and all that. Typically, when you get funded, it's really going to be normally a sit-down, very informal conversation between you and the venture capitalist angel investor, and it's not going to be some big excuse me, not normally going to be some big big ordeal. You're going to have a conversation. And the very first, when I generated the $600,000, it was done literally on a yellow legal pad. And, I had everything I wrote out. I think, here's the deal. This is what I'm willing to offer, right? And the investor, he grabs it, and he sits there, he looks at it for a second, and he scratches through my number, and he writes in the percentage that he wants. Literally, it's no joke. And I'm like, okay, because I came in low, obviously, and I had wiggle room. I knew where I was going to be happy being. And his number was acceptable to me, and we shook hands, and boom. A couple days later, I got a $600,000 wire. Okay? So that's how it normally works in the real world. You're going to be typically dealing with, some individual. Now, if you're doing pitches and presentations I've done stuff years ago to these multi-billion-dollar corporations. We did one for, I don't know if you guys know who Chubb is. They're a big, gigantic insurance company. And yes, I was in the suit and had the big formal presentation and all that kind of stuff. I also did stuff this goes back about 30 years ago with Universal Studios here in Orlando. And it was a one-on-one deal with the decision maker. And that was it. It wasn't some big boardroom. I've done the big boardroom things too. Okay, those are typically more of a pain in the ass because you got have a bunch of decision makers that are in there, and there's typically somebody in there that's trying to kill your deal from the very beginning. But most of the time, for what you guys are going to be doing, it's going to be elbow to elbow. You're going to be sitting at some table someplace. Could be friggin' Applebee's, could be Outback Steakhouse, could be somebody's office or whatever. This is actually done on a dining room table. And by the way, this photograph is not, this is like a stock image. It's not what actually happened. But I was just trying to give you an example of exactly how it typically ends up working out when you're out there, generating or raising capital from individuals. It's not going to be some big formalized process like that. You're going to sit down and have a conversation, go through whatever questions they have, and then if it's something, if you pre-qualified them and they're ready to roll, then it's like the cocktail napkin contract. That really is how it works. Okay, and that doesn't mean that you don't have other contracts, but the initial agreement normally, like I said, we wrote things out on a yellow legal pad, and that was the deal, and that's what we ended up doing. Okay, so That's how it works, guys. I mean, anybody have any questions? I hope you have questions, but that is exactly how it works in the real world when you want to generate capital. Now, the second, second one when I was over 400, what was it, 400 grand, I think? Yeah, 400,000 on the same deal. I was in the guy's office and he just wrote me a check. Okay. Well, I mean, it was not some big elongated process. We had a conversation and boom, here comes 400 grand. Okay. So, it does not have to be, and let me qualify this. If you do your homework correctly, it does not have to be overly complicated. Okay? It does not have to be overly complicated. But you got to do the work. You got to put the work in. That's what most people don't want to do. If we go back over to Facebook, right, and if we scroll through a bunch of Facebook groups, let me get out of that. I'll get out of my group. If I scroll, let me just go through my timeline. I'm probably find, maybe not. There we go. Normally there's like 100 of these things in here. Now it's all coronavirus crap. Here, let me see. Go to somebody. I don't know. Facebook. Let me see. I'm trying to think of other real estate investing groups. So, all right. So here you go. Somebody throwing stuff up here. Let's see what they did. Let's see exactly what they did here. Let's see if they did something so you don't have to pull teeth. Okay, all right, got that. This person actually put some work in. Okay, normally you don't see all that. I mean, let's see what we got. Do we have ARV 275? They should have comps in here, but they don't. Where are you getting the 275 from? What's the estimated cost of repairs? Okay, 1250. All right, so here's one comp, supposedly, and then they tell you what their requirements are. But they don't have, again, and this is better than 99% of what you see most of the time. I don't know who this is, but they've at least provided you, some information. Most of the time it's not done that way. Most of the time you go through these things and it's just somebody, let's see. Here we go. Well, maybe they're going to prove me wrong in real time today. This guy's actually providing comps, asking repairs. Okay, so they're getting a little bit better at it. But most of the time when I see these things, it's, it's just, okay, here's an example. So you got not even the address. 5-bedroom, 2-bath, first floor, delivered vacant. Second floor, very good, 10 to 800 a month, good condition. Price 192.5, ARV 240. That's it. That's so. As an investor or a potential buyer, now I gotta pull teeth to get the rest of the information here, right? Why? Why? Can anybody tell me why? Because what happens in these situations, in case you guys don't understand, all it does is aggravate guys like me, okay? Because I don't want to have to pull teeth to get the information. And that's why when you do, you make efforts to raise capital, you want to make sure they've got all the information, all right? All right. So here's another one. Let's see. Subject to McKinney, Texas, 3, 2.5, 2. I don't know what that means. Well, Jason, if they don't have equitable interest, they can't market the property at all. Okay, they got to market the contract. Price $278, ARV $290. House only needs paint. Sellers have 2 gallons of paint. Okay, so what are we talking about here? 12 grand worth of paint. All right. PITI 1917 a month. Interest rate 3.5. Remaining balance 271.5. Average rent in the area. House size 2,100 a month. Yeah, who said that? Don't have it under contract. Daisy Channing. Okay, Donna. Yeah, you may be right. I don't know. Falsely accuse somebody. I don't have any knowledge of. But you see these things all the time, right? It's like I'll put all the information out there. All right. Is this the same person again? Yeah, there's the same guy doing the same thing. All right. So, but my point is this: is like if you want to sell more deals and you want to sell deals faster. We're talking about just sell on the sales side. Put all the information out there, okay? You can create a template. You do it one time, and then you've got everything that you need, so that you can just input all the information and all the data that somebody's going to need, and they don't have to pull teeth. And if you think that this is some way to generate, leads for cash buyers or whatever it is, that's not how you go about doing it. By aggravating them up front, making them have to try to pull teeth to get information about a potential deal, okay? Because they're like, why? They're going to pass on. And let me explain to you what I mean by that. So consider you, if you're the buyer, and you're getting presented deals every single day, right? The deal, you want your deal as the seller or the contract to sign or to go to the top of the pile. Okay, and the way that you do that is by providing all the information so they don't have to ask you any questions, right? And what happens is when you do it this other way, then they don't they got to pull teeth. They're going to have to waste a bunch of time to try to get the information that's necessary to make an intelligent decision. And are they going to do that, or are they going to look at your deal that has all the information and move forward with you? Does that make sense? Hopefully that makes sense. Anyway, that's what I do. I don't when all these guys like DM me for details and all that stuff. It's like so friggin' annoying. It's not even funny. Okay, I don't know why people do that, but if you're trying to generate cash buyers, there's a much easier way to do it. And I've done webinars on it before. I can do another one if that's what you're doing. And pissing them off up front with limited details is not the right approach. Okay, so all right. Anybody have any questions? Otherwise, we're going to go ahead and wrap this up. Hopefully, this was beneficial to you. If you have additional need to raise capital, or you want assistance or help with that, we've got programs for that where I can work directly with you to be able to do that, so that you can put your stuff together and help put you in touch with people that actually have cash that do investment deals. But that, my friends, is, there it is. You want to be the guy holding up or the girl holding up the green funded sign, okay? Right? Not the unfunded sign, right? And this is how you do it. So that's how I did it. That's how you can do it. But it takes that 4-letter word called work, all right? It's a little 4-letter word called work, and work doesn't sell. Right now, like I said, you got tremendous opportunity to get all this money that's going to be flowing out of Wall Street into your deals, your rehab projects, your apartment deals that you want funded, the down payments on apartments because you don't have the money, whatever, right? But you got to do your homework. I mean, you got to. You just got to. Thank you for the kind words, Jonathan. I appreciate that. I didn't even know you were on here. But nonetheless, that's it. There you have it in a nutshell, okay? Do your homework. You guys, I gave you the link. It's in the Facebook comments if you guys want to go see these pitch decks and how they work, so you can start trying to understand exactly what you need to do. Because you should be doing one of these. Look, anytime you're trying to sell a property, honestly, you should be doing one of these, okay? Right? And it'll be a little different format because you're not trying to raise capital, but you should be doing something like this that has all the information that somebody needs. That's what you actually should be doing. You can follow one of these as a template. That's what every property that you contract on, you should have one for. If you don't especially if you don't have your own website. If you have your own website, obviously, then you can just put it on your own website with all the information and just give them the link. That's easy enough as well, too, with the ability to download a PDF or whatever. But other than that, raising capital, guys, look, it's easy. I'm just telling you, it is easy. The problem is that it's not easy for people that don't do the work, okay, and that don't know what a deal is and that they don't have a deal. But it is actually easy. All right, I just told you a minute ago, man. Like, I sat down and had a conversation. I don't know, hell, it was like 30, 45 minutes. They had already read the prospectus, and we pulled out the yellow legal pad, and I went through a bunch of stuff, and boom, here's what I want. And he crosses it out and says, this is what I want. And we shook hands and then, move on down the road. Okay? And that's typically how it ends up working if you've done your work properly. Okay? So, need help? Let me know. I'm here. You can PM me, DM me, do a post on Facebook, tag me. And if it's not too personal and something somebody else can benefit from, fantastic. But that's it in a nutshell. Okay, there's tons here. Look at this. Let's see. I'll tell you what before we jump off here. What's going on now? Let's see what they're doing. New 52-week low today. Yeah, I don't know if you guys just saw that. It's probably changed since then. Nope, there it is. New 52-week low today. Okay, you know what that means? That means you got a lot of people panicking. Okay, and they're gonna be looking to get out because they didn't sell when I told them to. Right? So they're going to sell the dip instead of buy the dip. Right? They're freaking out. And guess what? That money can go to you in a collateralized investment that can yield them, depending on your deal type, 10 to 12%, which they're not going to get on in the stock market. They're not going to get from their bank in a CD. But if you're doing, rehabs or flips or whatever it is, you could easily do that because it's nominal because you're going to have the property for such a short period of time anyway. Or you could take that capital, like I said, and if you're working multifamily deals and you don't have the 20% down, well, they can put the 20% down and, you can syndicate it if necessary and be an apartment complex owner, okay? Because these people, they're getting burned right now, okay? And it's going to continue, so understand that. And they're looking for great opportunities, and you have the ability to give it to them, okay? But you got to put the work in. I'm sorry to tell you that, but that's the truth. All right, guys. Hope that was helpful. Have a great day. Hit me up with any questions that you got. Other than that, let's go make some money.